despite all the hand-wringing we've been hearing about the state of the economy, health of the consumer, earnings season has really told a different story. Take Kimco Realty, one of my favorites by the Shopping Center Real Estate Investment Trust, reported an excellent quarter nearly 2 weeks ago. Not only did they beat the estimates, they raised their full-year forecast for funds from operations per share and same property net operating income growth, incredible. REIT equivalent of the same-store sales, fantastic numbers. Tells us their business is seeing real momentum. Oh, and it doesn't hurt, by the way, got a 4.6% yield. Pretty protected, too. So how do they pull it off? Let's check in with Conor Flynn. He's the CEO of Kimco Realty to find out. Mr. Flynn, welcome back to Mad Money.
Great to see you. Thanks for having me.
Okay, so first, Conor, you're incredibly transparent, and it's terrific because you explain to people that it's really a supply problem. There's not enough land, and it's about tenants, and your tenants are good. And yet people keep selling the stock anyway. Could you explain to people why the 4.6% yield actually may be a bargain, and that you yourself bought a huge amount of stock, highly unusual for REIT, when it got hit?
Well, it's all about the fundamentals, right? So if you think about it from a high level, supply and demand, supply is the big benefit to Kimco Realty.
Yes.
Of all the commercial real estate sectors, shopping centers are the lowest amount of new supply under construction, 0.3% of existing stock. There's more office being built today than there is shopping centers. And it's been 10 years running. So if you look at that amount of supply that's been included in the supply chain, all of a sudden the demand has outpaced supply, and that's why you're seeing pricing power for Kimco Realty and vacancy rates at all-time lows. And so that's why you're seeing new deal spreads of close to 40%.
Meaning that when you have an outfit like a Party City go under, it's actually in weird way better for you.
And that's a perfect example. These like bankruptcies that have hit the first quarter, these are all multiple filers, meaning that they're Chapter 22s. They've been in bankruptcy multiple times.
I like that.
And so they have been to the dance. We knew that this was coming, and we're seeing how quickly the absorption is occurring. We've already backfilled half of our Party Cities at nearly 40% new lease spread, so 40% higher than what Party City was paying.
And what's key for people they should recognize is that when you have an anchor tenant like my Kings in Short Hills, which had a vacancy for a while but then filled by a gigantic healthcare provider that I use, there's an anchor that's a real anchor.
So, perfect example. Most Kimco shopping centers are dominated by a grocery anchor, like a King's or a Whole Foods or a Trader Joe's or a Sprouts or a TJX. And those two combine for really the anchor cross-shopping that is the sweet spot in retail. And now what you've seen is it's all about services. Services. So over 80% of our new deal flow is coming from services, so urgent care facilities.
That's what exactly you know.
Like when you think about what's changing in the retail environment, the omni-channel approach where the brick and mortar is being enhanced by the e-commerce, but services is all about in-person, all about the e-commerce resistant type use. And that's what's driving vacancy rates to all-time lows. And the numbers were so strong that we felt we had to raise.
All-time lows. That's why it was so right. Now, when I look at your terrific deck, I see something, and I'm in Philadelphia, we talk about that, but Coulter Place, Suburban Square, Ardmore, which is where my mom resides from, a mixed-use project. So it's not just all retail.
So this is the future of Kimco Realty, is you think about, obviously it's an all-time lows vacancy. You're seeing the real strength of demand. But the future upside is all those parking lots that are undeveloped. So from a high level, shopping centers are 80% parking lots that are just untouched. And that's all upside for us. Our strategy is first ring major metro markets. And parking ratios are required by the municipality. And so think about driverless cars, robo-taxis, all the things that are going to actually lower parking ratio requirements. And that's why we've entitled 12,000 apartments to be built on our parking lots of the future. And that's where mixed use comes into play. Retail enhances the apartments. Apartments enhance the retail. It's a harmonious situation where they can drive traffic to each other.
Okay, so Conor, why do you think that there is such a, let's say, price discovery problem with your company? We get tariff legislation, and then immediately we raise tariff. Immediately people think, I got to short Kimco. I got to get out of Kimco. There is nothing that has got to do with China in your places.
I think a little bit might be retail PTSD. There's some people that
from
probably
what they remember.
You're right. The retail apocalypse, where that was the end of the brick and mortar retail world, the dawn of e-commerce. We've had our black swan events, COVID, when essential retail versus non-essential retail. Kimco is positioned as a defensive play that's driving value to consumers every day because it's convenience and value. It's where you live, it's where you shop, it's where you play.
Now, we always do have places that I guess you would say on your watch list. Mm-hmm. What percentage of your tenants right now would you say are on your watch list?
So the watch list tenants are the ones that have credit issues that might go into bankruptcy. It's the smallest list it's ever been in history.
Yeah, how about that, huh?
If you think about COVID, what were some of the benefits of COVID? The watch list got reduced significantly. Right. The people that were on sort of like the watch list because their balance sheet wasn't great or because they didn't have a good business model, they weren't able to make it through. Now, all of a sudden, you think about the dawn of new retail, the services industry, urgent care, pediatric urgent care, vet clinics, health and wellness, all of that coming into the shopping center. All of those vacancies have been absorbed with much more resilient type tenancy, and that's why we feel really good about the future.
I want people to own your stock, and I know that, and I say this because I like the yield, and I say that it's backed up by a lot, but the thing that's most important to me is so many REITs that I know, they're constantly issuing stock. It is highly unusual to see someone who just said, enough. We're going to take money and buy our stock back. But that's precisely what you did.
Well, we have a great balance sheet. You can only do that if you have a great balance sheet. We're an A- credit rating from Fitch. We're one of only 11 REITs across all REIT universe.
Of which there are many REITs.
And so we feel good about the ability to buy back stock when it's dislocated like it was. Post-Liberation Day, there was a big sell-off. Right. We saw that the business fundamentals were super strong. Blackstone just came into the sector and privatized ROIC for a very strong cap rate, big valuation. And so, to your point, there's this big disconnect between public and private valuations. And sometimes there's windows of opportunities that we feel like we should take advantage of, and buying back stock was exactly that.
All right, I want people who think that there are no bargains out there or people who are looking for income to think about Kimco Realty, a company that I know from the family. I mean, this thing has always been right, and it always, because they are such superb underwriters and knowledgeable, understand their balance sheet and what can be done. It has been strong throughout all the different, what did you call them, retail
apocalypse?
Retail apocalypse. It's Conor, Flynn, CEO of Kimco Realty, KIM. Mad Money's back after the break.
Coming up, time to look overseas. Cramer's digging into the European markets and whether investing across the Atlantic could lead to big gains. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.